Good afternoon, everybody. Welcome to the Edge Market Update for August 11th. And we had a big August crop report today. The trade didn't react usually how they do with volatile swings, but it was a fairly neutral report. The production estimates for 2023 for the U.S. corn and soybean crop were lowered and prices spiked higher. But demand came in lower, which brought prices right back down, and it was pretty much a wash as we traded fairly neutral throughout the rest of the day and ended with a little bit of weakness into the close. So the U.S. corn crop came in estimated at 175.1, which was a little bit lower than the estimates and 2 bushels to the acre lower than the July estimates. And then soybeans came in at 50.9 actual for August, which was a little bit lower than the trade estimate and lower than the July estimate of 52 bushels to the acre. So that was a positive to the trade. However, ending stocks rose for corn up to 2.2 billion bushels, and then also soybeans ending stocks were higher than expected at 260 million. So again, it was a very neutral report today. Next week will be important if we get some rain in the forecast. We could see managed money sell some more, and I think that's a little bit of an issue because we are already at support levels, especially on corn. May have more of an effect on the soybean market with better weather forecasts, but we'll just have to see how the trade reacts next week. But to go ahead and get started here with new crop corn, we remain in a steady downtrend. So we had our high at the end of June at $6.30 per bushel. We had our secondary high in late July at $5.72, and you can see this negative price trend line falling lower. But we are currently at support, and it looks like we're trying to form a triple bottom here. I drew a box, and we kind of have this trading range from 491 down to about 481. So I would not be surprised if we spent some more time in this box next week trying to consolidate and build more support, and hopefully the first thing I'd like to see is get a daily close back above that 497 level, which is that 9-day moving average. But we have spent quite a few trading days in a pretty small range, relatively speaking, building support, contracts, trading hands, and it looks pretty good. We just need some fundamental news to bring price back higher. We did have some selling volume today, nothing crazy like past reports. Strength indicators remain in a negative downtrend. We have negative divergence formed here, and we are curling a little bit lower. Would really like to see that break above that negative trend line, which would be pretty bullish, but at the moment we are not at that point. Money flows continue to be fairly weak. We have gotten a little bit higher here off of the lows from last week, but potentially may retest those lows again. And then long-term momentum is negative. We do have a negative trend currently as well, but if we were to break above that, that would be a bullish sign too. So ideally for next week on new crop corn, would really like to hold this 491 to 481 support level, break above this 9-day moving average, and ideally would be awesome to get back up to that 20-day moving average around 520. Ultimately, to get back to these prices, no matter what, we need to break above this negative trend line. When that does happen, that would be very bullish, but certainly we might just have to wait for that time to come. Moving on to new crop soybeans, we closed the week at 1307, and price closed just below the 9 and 50-day moving average that's converging right around that important support resistance, kind of that zone where it flips into support and resistance at 13.15 per bushel. So we are trading below that at Friday's close. I would consider that slightly bearish for now. If we do get some weakness in the next week, easily could see that 1282 test again, and then we have a final support down here at 1256, which would prevent an all-out fall down to potentially at least this high 11 to low $12 range. So would really like to see it, this 1282 to spot hold. If we do get back above this $13.15 area and above those moving averages, that would be really what we need to see some bullish price action again, to maybe attack that 20-day moving average at 1360, and then that ultimate resistance, that first resistance level at 1390. But again, we'll just have to see how the trade reacts, and after they have digested this report today, as they put some more volume back out there, paying attention to weather forecasts to finish out August here. Strength indicators remain in a negative downtrend, and we did curl back lower today. We are fairly weak, nothing crazy weak, so that's what that is right now. Money flows, they did pop back up off of an oversold reading, closer to neutral, but price did not correlate with that. Typically price will also rally, but just has not seen that happen yet. And long-term momentum, we did make an initial downturn at the end of July, and moving closer to a neutral reading right now. So again, would really like to see this 1282 to 1290 area hold as support next week. If not, really big support here at 1256 to prevent any further weakness down. Get above 1315. We'll start to see bullish price action again, and ultimately hope to get to that high $13 area at some point by the end of August. But so that's it for the new crop contracts. One other thing is oil and energy prices have been turning up and are trying to break out again. So potentially consider looking at farm diesel quotes and maybe some propane natural gas quotes with your suppliers. If these do shoot higher, they could happen fast. So maybe you want to see what a quote would be before you get in the fields, or prepare to get in the fields for August. Other than that, if you have any questions, schedule of insurances were sent out this week. If you have any questions on your bushel or revenue guarantees, please let us know, and we will help you out with that. Other than that, we want to thank you for your business and have a great weekend.